Hey everyone, it's Adam back for another video, and I'm going to go over a LinkedIn post that I saw yesterday that goes over the second quarter GDP prints, and it's from the chief economist of ZipRecruiter. So I'm just going to read through it here. She says GDP growth, consumer spending, the Fed's preferred inflation measure, and jobless claims all better than expected. GDP grew at 2.4% annualized rate in Q2, beating expectations and coming in exactly in line with long-term trends since 1990. The acceleration was driven by a pickup in business investment, structures and inventory, but underlying demand, final domestic private demand minus inventory, government spending, and trade effects was also strong. Growth in consumer spending, federal government spending, and state and local government spending decelerated, but was still robust. Core PCE rose at 3.8% rate in Q2, down from 4.9% in Q1. A large downside surprise with optimistic implications for the future path, inflation, and interest rates, and real wage growth for workers. Initial jobless claims fell to the lowest since February, suggesting that layoffs might be slowing and hiring picking up. Far from slipping into a recession, the US economy is accelerating, its strength bolstered by a robust labor market that is boosting the US consumer. So I have a differing opinion than this. I don't think the economy is accelerating. I told a friend, after reading this, it's like kind of, let's go party like it's the beginning of 2008 kind of feeling. So I'm going to go through some data points here why I have a contrary belief. So I'm just going to bring this up, a few articles. So we go to the initial jobless claims. So the initial claims were 221,000 for Saturday, July 22nd, 2023. If we go back to 2022, a year ago on August 6th, they're 214,000. So the initial claims were actually lower at this time last year, or right around this time last year. So I don't see why would we be so encouraged regarding the claims. And then also with regard to the economy, the corporate bankruptcies are picking up. So this is an article from CNBC saying that corporate defaults rose last month. And this is printed June 24th of this year. Corporate defaults rose last month with 41 in the US so far this year. That's more than double the same period last year, according to Moody's Investor Services. Companies are defaulting on their debts due to uncertain economic conditions and heavy debt loads. High interest rates have made it difficult to refinance as debt is more expensive. The number of bankruptcy filings in the US this year has also sharply risen to levels not seen since 2010. And that was right around the time of the GFC. So that's something to be concerned about. Where I think if you're discussing the economy, I think corporate bankruptcies would be something very relevant that we want to review. And then to go over the GDP prints, this is from Al Jazeera, and it kind of goes over the pickup in the GDP was business investment picked up. And let me just find the section here that deals with it. Trying to find. It was auto investment and airplane investment in airplane and auto. Yeah, business investment accelerated after almost stalling the first quarter, thanks to a rebound in spending on equipment like aircraft and motor vehicles. So I saw an interview with Lacey Hunt on Wealthion, and he believes that this is just basically a one-off for motor vehicle investment. He thinks it's basically going to decelerate in quarters going forward this year. I would recommend watching it. He kind of goes into detail, but essentially it's basically more production coming back online due to the pandemic. So this is likely a one-off situation. And then to kind of go over again, so with regard to let's see exactly what she says. Yeah, growth in consumer spending, and she finds this encouraging. As we have gone over, the credit card debt's at about $1 trillion with average APRs at 24%. So with credit card debt accelerating, I kind of think that this is due to the not necessarily people using their credit cards as net 30. They're probably putting that on their liability side of the balance sheet and just deferring it out. So, we've gone over in a couple previous videos, but this is a survey from a company called Primerica, which is a financial services company. Yahoo Finance did an article on it, and 71% of respondents say their income continues to fall behind the cost of living. So that's why I'm thinking the credit cards are being utilized more and that's being driven up. So, consumer spending, is it coming from a position of equity from the consumer? I tend to believe probably not. So, and then another data point as well is bank credit. So when we look at bank credit, credit's actually contracting. So as we can see here, and the last time this happened really was the GFC. So, credit's such an imperative portion of the economy. And when bank credit's contracting, this is, detrimental towards the economy. So those are a few thoughts I had on that LinkedIn post. And I really appreciate everyone watching the video and hope everyone has a great day.